really interesting stats there that are coming out of the various parties. RP data keep coming out with this really interesting stuff. And of course, those that live in those suburbs get the turnover up, because we real estate agents love it when you're moving. Speaking of funding and moving and all of the elements that are very important in property, we've got some royalty here. Not exactly Ralph Norris, who we had sitting in the very same chair, but very close. And that is, of course, the Regional General Manager for SA Northern Territory, Adrian Smith, a great friend of mine. Welcome, Adrian.
Thank you very much. And no, I know I'm not as high up as Ralph, but thanks very much for inviting me back on.
Sitting in that very chair, you know. So does that
privileged.
mean you might be the next CEO after Ian?
No, not yet.
Okay.
Not yet.
Adrian, I know that there are limitations as to what you can say, because
Yes.
that's how banks and big organisations work. What can you say about the headlines, particularly this week, about the job losses, the banks, and that? Just I know that Ian, I think, gave some sort of presentation.
Yes,
so can you fill us in?
today the bank made an announcement on some profit numbers, and Ian Narev was in front of the analysts this morning. He advised that there are no plans to make redundancies or send jobs offshore.
Yes.
So that is positive. Look, banks in general, and I'm sure your viewers watch the news, listen to the news, listen to the radio. Banks in general are under pressure in terms of funding costs. There's a lot of press on it. The cost of funds, just because of the events in Europe, the Eurozone, the complexity around things that are happening in Greece and Italy and all the rest of it, it has caused funding costs to go up, and that does have an impact. And the market has slowed down, so we've got lower growth.
I have a little theory, and you don't need to comment on it, but I wonder with the banks raising their rates ever so slightly, was more of a message going back to the Reserve Bank. But anyway, you don't need to
I won't make a comment on that one.
Anyway, I've written it in my inside story this week, so
I'll have a read of that.
Yeah. Now let's get down to some nuts and bolts. People watching this are in property.
Yes.
And I'm just very interested in your take. You're one of the biggest lenders in residential property. What is happening? What is the current activity? And what do you see from the banks and the funding end of what's going on with the real estate market?
Yeah, look, what I think certainly since coming back after the Christmas New Year break, I'm seeing a lot more activity, and where I find it interesting is where people had pre-approvals for loan fundings last year in 2011, and I'm talking quite a few months ago, have found a property. So these people have been on the market for some time. So they're fronting back into my branches, which is great. They've finally found their dream property. Some of these people are trading up. Some of them are new home buyers. And I think that's really positive. Now, why is that? And you and I had a chat over a glass of Chardonnay, I think, on this, that maybe some sellers have dropped their prices. You might have a comment on that as well, in terms of the activity of why this has started to pick up. Because it's definitely, to me, it's across the board of generally people out there, maybe a little bit more confidence, not too sure.
My view is it's probably 2 or 3 prongs to this, and we've talked about it because we're obviously both very interested to know what makes people do these things. But the new year has seen a much stronger commitment to action. And I think it's the realisation that the Europe thing is not going to go away quickly. So bad luck. You can't wait for that to completely pan out because we're waiting a long time. I actually think the government, who had a big year of essentially election mode, had an impact, and that's settling down, or people are sick of it, so they're getting on with it. And I think probably the biggest factor is that prices definitely are very reasonable. They're not likely to drop much, if at all, anymore. And funding is actually, is pretty reasonable.
Is it a pretty good price?
Yeah.
It's also, you look at, confidence breeds confidence, and you can keep talking the doom and gloom story. This is an amazing state, and we've talked about that before. My brother was over from New Zealand on holiday, tour down under. He was blown away. We
better say you are a New Zealander.
Absolutely.
Yeah.
But he was blown away by the affordability of housing and just what the state has to offer. You go across Melbourne, Sydney, you can't buy what's available in the state. So maybe people are starting to think things are better than what the press says. I'm not too sure, but certainly there is more activity out there.
So just in terms of your funding for people, so if people are watching this today, what let's have a chat about how hard it is to get money, and if money's so scarce, does that mean that the bank's not lending? And if they're not lending, who don't they lend to?
The bank is most definitely lending, and I would say that, I'm sure that's across all banks. The bank is most definitely lending. When you have a look at what happened post-GFC, there was a tightening of credit policy. And when I look over the past 12 months of where that's loosened up, you know, LVRs have come back up again.
Loan, you better explain.
Sorry, yeah, loan to value ratio. So in terms of the deposit that's required for a borrower. Things like there was tightening of the acceptance of people's savings and whether they got an inheritance to put towards it. And there, you know, all these things were tightened up. These things have started to be loosened. So I think anybody who maybe thought that they were, you know, maybe were looking, say, 18 months ago and got a bit frustrated by how things had tightened up, I think they should have another look. Because, like you say, the prices in the market are good, credit policy's eased up, interest rates are pretty good for borrowers in terms of you look at either the variable rate or the fixed rate loan, if that's what people would like in terms of fixing their loan for a period of time. Some great bargains out there.
Okay, now what about developers? I know that they had a really, really hard time in 08. Has that loosened up a bit now? Yeah,
we were chatting about when Ralph was here the other day on TOOP TV, that if they have a case to put forward, they can show that they are experienced in what they do. They've assessed their risks, we assess their risks, there's no reason why developers cannot borrow money.
But how much?
Yeah, well that's the $1 million question. And that's, look, it's a case by case.
Yeah, okay.
You know, but it's certainly not a no.
Right, okay. Just a couple more questions. The different types of loans, would you fix or would you do a variable at the moment?
Well, it's, to me, you shouldn't. I don't think you should be looking at what rates are out there. I think you should be looking at your current circumstances and going, do I want the predictability of my loan payments? So if I want the predictability that my loan payments are going to be X amount per fortnight, and I don't really want that to change over 2 years, then go for a fixed.
Okay, we'll come back with some more questions a bit later in the show. Now let's go to have a look at some sold properties. A really great segment, Going, Going, Gone.